All right, good morning. All right, so yeah, yesterday was a go nowhere day. Get some charts up here. And so guidelines for dealing with days like that. Well, as intro, not that we know exactly what's going to happen on a day-to-day basis, because we don't, but the AM reviews, we generally say, well, this is likely to go higher because of a gap, or it's going to be in a trading range because of how the structure of things are set up intraday and so on. But in the middle of the trading day, we use market internals intraday. And so I mentioned this in the green room. I actually sent out a little short 1 minute video on the social media channels. And I'll show you how I set this up. So this is a basic chart. Everybody has it, NYSE tick and advancers minus decliners. And so this it really will save you. I mean, as far as potentially getting chopped up, things change. And you can see I got SPX in here, but uh, as far as the potential for a real good trending day, it's unlikely when you've got the tick hovering around the zero line the majority of the day and the AD line correspondingly around the zero line during the day. So, we discussed this in the room yesterday about, hey, look at the way this went down and S&Ps held up really well. And we saw the Russell had fallen sharply at that time. But maybe you're not looking at the Russell. And that's one of the reasons to use market internals is that it gives you a broader picture of what's going on, out there without looking at, you know, 5 or 10 or whatever different instruments. Um, so you know, I have this at 1,000. I had one at minus 1,000. But anyway, just hovering around here most of the day, and this hovering around zero, it's unlikely you're going to get a substantial trend day. Uh, Knowing where the extremes are, after moves can give you a heads up. But one of the things you can do, and I think any platform can do it, it's called different things. Like this we get like a highlighter. In NinjaTrader, it's called something else. But you could set up something like this. And then the color coding, without even looking at the numbers, when I look at this and I say, hey, these bars are mostly around the neutral level, plus or minus 200. And this is hovering around the zero line, and this yellow area is plus or minus 500. Whatever I'm thinking, this internals are telling me, you know what? If you think this is going to be a big move with internals like this, you better reevaluate or go look at something else. Right? So it's a really helpful guideline that I thought I'd share this morning because yesterday was a go nowhere day. Look at that little doji bar right there. It just things went nowhere all day. So and nothing got touched as far as credit spreads, but it didn't make some kind of a move either. What we look for is we look for these extremes. So these are today's numbers. They came up about five five handles from yesterday. So not much of a move. And where things are right now, probably not going to get much of a move either, I think, the way things are right now. Everybody's waiting for this data in the latter part of the week. But and so I hope we get some more movement than what this is. There's different stocks, of course, to look at, but we always look at the S&P and the Qs and the futures and the Russell and sometimes the Dow as intraday trading instruments. And so again, you use those internals as an excellent guide. These are daily internals that we use for swing and intermediate term trades. So they're really, really helpful. All right, so let's look around. There isn't much happening here. There's some stocks on the move. Uh, so well, this is today, right? This is today. And so there was a little bit of movement yesterday. It's a 24-hour chart. And you see they're starting to sell off a little bit here um, on the, why I have this on a 5 minute. Usually look at the 60 in the morning or the 65. So this was the big nasty day on last week. There was a move up and a move back down, and it's kind of a little bit past the middle of the range there. Notice the rejection that occurred there at 3 o'clock in the morning. That's when Europe or Germany opens up. So maybe there was a little sell-off there. I don't know. I'm just thinking that because I see this rejection, but overall prices aren't going anywhere. And we got to keep things in perspective. We all want our own agenda, but sometimes things don't work out that way. So that's a little more data here. So over the last couple of weeks, we were talking about this Head and Shoulders top, and maybe it would break down, and it never did. And there's a little dip down there, and now actually slightly for the moment exceeding this pivot high. And we got a trading range, and so maybe it can get to the top of the range today. Maybe it doesn't. I'm thinking that until we get that other data in the latter part of the week, well, it's a pretty wide range, but it's not going to move out of here. I don't think so. Right, the Dow also not moving, but constructive as far as the potential for a move up. Wide range bar, the dip got bought here. So far, it's holding, and that suggests going higher, rising 20, rising 50. At some point, you have to think, how long can these consolidations go on before longs throw in the towel? I don't know. But at some point, I know that any kind of rejection type of a bar would start some selling. The same as, the rejection bar can happen to the top side, it can happen to the bottom side. But maybe that's what we need, is another rejection bar to, get things moving in one direction. Because right now, this is like in a coma, right? Nothing's happening, which isn't very exciting and doesn't provide great opportunities, right, for intraday trading. And as far as swing trading, of course not, as we look at this and related to the other ETFs and such. Isn't there some news at 10 o'clock? Yeah. Yes. And someone in the room just posted that 10 a.m. Non-farm payrolls. Where do I get that on the Qs, the Head and Shoulders? Well, let's go back and look. I was looking at the futures, but look, if I do this, uh, I do this and eliminate. I could eliminate that, but look, if I go like this, at that point, it's like, okay, it's in a trading range, pivot high, pivot low, pivot low. And so what is it going to do? Is it going to be a right shoulder and roll back over? Is it going to make new all-time highs? Nobody knows, right? But as I look at that, I'm trying to get the other drawing tool out here. Where is this freaking thing? And you can go back and look at the videos at the time, and I drew not something exactly like this, and I was like, okay, set an alert down here, set an alert up above here. Let's see what it's going to do. So a Head and Shoulders or an upside shakeout, which is more violent, but a Head and Shoulders makes a new high, and then it makes a lower high and starts to pivot, and it breaks. And that didn't happen. And so what happened was it went down there, and buyers stepped up aggressively. I think this was last Tuesday. and now it's up at the top of the range. And yesterday was a go nowhere day. So it's still just in a trading range. Well, it doesn't necessarily mean much higher prices because it's bullish that the head and shoulders was negated, but it's just a trading range. So it is what it is, right? I mean, the fact that it's in an uptrend would suggest that it goes higher. And the fact that it didn't break the neckline tells us that buyers are in control, you know? So we have patterns. And then, as always, no matter what the pattern is, it gives us a bias. And then we see, does it actually follow through or not? So this didn't break down, which was a good thing. It didn't break down, triggering it and then fail. And so now it's trading range, right? Pivot highs, opposing pivot lows. And the way we look at something like this, what we call our factory work, meaning how we interpret patterns, is that this is the bottom of the range, is the top of the range. It's likely to stall. And that's exactly what happened on Friday. It was a little bit of a violent move to the downside on that gap up. And I've used this analogy that this market walks on eggshells, but, you know, never really breaks them. So now it's at a resistance area. What does it do there? Well, ideally, and this is the concept that I've coined, absorbing supply, or simply bullish price action. It goes sideways there. It doesn't go all the way back down to the top bottom of the range. Or it could go sideways there and we get a rejection bar or a correction bar. Meaning, if today's trading, because nothing's happening here, but if today was to go down and I saw another bottoming tail bar, so one of the things we'd be looking for today is, okay, if the Qs were to come down here as day traders, we're going to look to buy that with the appropriate pattern on a 5-minute chart or whatever you choose to use. And if that resulted in a bottoming tail bar, then breaking these lows and coming down here, I've got this correction bar, then I'm going to be thinking too, that's going to go higher because that's what the chart tells me to think. Right now, it's telling me sit on my hands until there's a move to support a resistance, that tells me to do something. You're welcome, Robert. Yeah, I mean, that's what Dan and I do every day. We share these things, and recently we started making these short videos, which are around a minute, because people love those things. They're like little, I don't know, hits of crack. Take that with a grain of salt, but people love these shorts, no matter what it's related to. If that's what you're interested in, but you can start clicking through these things and seeing these little tidbits of information. Yeah, thank you, Brett. And so we do these little educational things that are a minute, and you can just go on to the next one, and you get a whole bunch of information one at a time, rather than watching a half-hour thing or whatever it might be. Or even some people, sometimes I get impatient for 15 minutes, but on the other hand, if something catches my attention, I like to watch podcasts that could last an hour if they're good. Yeah, but so yeah, so let's move on. It's already 20 minutes. You get me talking, and so look, transports are doing nothing. Yeah, last week in the green room, I mentioned the big drop in lumber futures. I mentioned wood. I was like, what's going on here? And interest rates going down. This is not a good thing as far as recession and no inflation based on something like that. Yet gold futures are ripping, which is based on inflation concerns. So more confusion. And so this is a little short-term extended, but it could be a measured move. This is what I call a correction bar. This is what you want to look for on something that made a move out of a base as a continuation pattern. Buyers on a dip, even though extended. All right, interest rates. And I'm going to hand it over to Dan because I talked too much already. All right. As you know, they've broken down. So inflation, no. Slowing economy, yes. Slowing economy, inflation, the two don't go hand in hand. Interest rates lower, good for stocks. At some point, we're going to find out recession or no recession. And if there's no recession, lower interest rates, stabilizing at a lower level is good. And then we see the market continue to go higher. All right. Uh, Other than that, I mean, look, crude oil, you know, going nowhere, but that broke down. It's not dropping. Look to gold. The markets aren't moving much here. Silver looks great. And Bitcoin is up a little bit here, but that's, a little bit of a concern, kind of like not really a textbook one, but kind of a bear flag kind of thing. I mean, bear flags don't go back up to the top of a bearish bar, but it's at a point where there's going to be sellers. So there's uncertainty about which way things might go today. And again, the market's waiting for news. All yours, Dan.
Good morning. Yeah, it's always asking about 10 a.m. number. Exactly, non-farm revision. And I've been hearing some things about that, of just how bad the employment data collection system is. And one guy, I don't know his name, one, one guy on CNBC says the Fed is so antiquated in their collection. He says they just rely on flawed data. He says, why don't they at least use the internet to get current information? He was funny bashing them. And this other guy yesterday was also bashing the Fed, saying he went all the way back, to the 1900s. He said we had zero inflation back there. And then the Fed gets involved and we have inflation. We had a couple stock market crashes. He's like, we don't need the Fed. The market can set rates on their own in the bond market. And I've been saying that for years myself. Thomas Bilko. Yesterday was the entry. In fact, that was on our list. I think that was on Sam's list. And yeah, but you're chasing now. Lima Whiskey. It's not a textbook 1, 2, 3 to the deep retracement, but same message in bullish weekly monthly. So yeah, let's put that on the list. When you ask about directionals, scroll up. All right, I missed that comment. Somebody said something about a direction. Yeah, yeah, somebody on the news was saying, yeah, the guy today said, yeah, just go to this website and they'll give you the true number right now. All right, let's go through the normal process I do. Sats gapping up a little bit. We have a call spread on that, break even stop. If this were to have gapped down under yesterday's low, that would be what, the old classic, not classic, the old people calling them an abandoned baby. But it's a topping pattern. In the call prices, we shorted I forget, 95 or 100. So it was insane. The juice that was up there. All right, UNH is finally popping here. I don't know what the news is. You know what? Let's sell a third right here, pre-market. I had given that yesterday on a 5-minute pullback after it gapped up. So it triggered right here in the morning. And then later on, I sent out a text saying, hey, if you're not in it, I didn't like the retracement, but we got lucky on whatever pop is here. 30-minute low. Those versus firmers. D-Dog. D-Dog Greg mentioned yesterday. And I posted it as a put spread over yesterday's high. Let me set an alarm. 136.93. Yeah, I like that we're pulling in here. I think we're gonna have another boring day. VRSK. I posted as a directional. This is just a big old W bottom. 273. $73. Done. Look at this thing I saw ripping here. I think this, yesterday was onto, not onto, whatever you're called. Here somewhere. But now this is just reminding me of yesterday. So my guess is, yeah, Octo, thanks. My guess is, Octo was something Bitcoin related, and I'm just guessing this is the identical thing. So this is just telling me the friggin' euphoria of chasing. You're just chasing crap. Reminds me of the dot-com days. And so that's today. Look at this thing going from $2 to 55. Really? Look at Octo yesterday. Look at that. It came out of this little base at the $1.50 and went up to 80. What a friggin' joke. That's my answer. It's a joke. Really nice. Okay, yeah, so with the UNH news, I didn't know what it was. I didn't care. Yeah, I don't care about that, but we have Mo as a put spread, so I had a small gap up. And then CNC is another one. I got an alarm up here. So that could finally maybe get going. I'm gonna set an alarm at 29:20. And I already did. All right. Let's go to, those are on my alarms. Let's go to earnings now. Big Mac index. True-flation is, but well, Robert, believe it or not, there is some madness behind that. There, because it has to do with people, like what type of people go to McDonald's? Yeah, sure, everybody, but that's probably the ones that can't afford Ruth Chris Steakhouse. And so, right. But the point is, if the sales of Big Macs are going down, it means, I think I heard like a combo meal is like $18. It's like, who has $18 to go have lunch? All right, back to earnings here. I'm running out of time. All right, so Alex gave us this idea and it worked wonderfully. So we bought a 1250 call 11 days out. And with the rally, yesterday it went up to 14. And so what I do on things like this, because you can't get out of your call option. Why? Because I ain't trading. It's that simple. So I short the stock to hedge my gains on a long call. And if I'm long puts, then I buy stock to hedge my gains on a long put. So I tried shorting it at 13.95. I didn't get filled, but I got filled at from 13.65. So I would just unhedge, but nothing to do now with that. Casey, I thought I saw it was up $30 last night. But now that's gapping down, so that looks like a call spread idea. Mama gapping down, but no pattern. CNM getting whacked. Okay, so this I'm gonna put in my category of excessive gap. Bearish, excessive, but let's see what it does. Just here. CNM curve. All right, curve, one of you also gave me yesterday. I was watching. It's a double bottom with a new low plus. And so I did not get my entry yesterday. My entry was going to be over this right shoulder, but the gap's messing it up. Box here, I know we've had some news. That's a nasty gap, creating a breakout failure, but I don't have a pattern to do anything. Look at this gap on NBIS. Now, there's nothing to do on NBIS, but I don't even know what industry this is in, but it could be a 3 DTE call spread. And also, you can check the cousins in the sector and see if there's anything of interest. No, tech, excessive gap, nothing. There's our CWD. Look at that. All right, let me see if this thing is optionable. Just, whenever things, well, I can't say whenever, but I've been at this full time 25 years, part time 50 years. And history says moves like that, unless it's going to be a buyout, do not end. They don't end pretty. And I got a lot of alarms going up here. Look at Octu yesterday. Man, look at that big old top and tail now. Now, I did look at Octu yesterday and it did not have options, but I guarantee you, when something gets in the spotlight, so CWD does not have them. Octu does not have them, but I say they don't have them yet. XLV is triggering a Mo up alarm, BRSK. Nope, it's not right. All right, looks like VRS. Let's wait for 5-minute high on VRSK. Just because of kind of up there at that prior high. D-Dog triggering, so that's good. Put spread and possible day trade. That's a nice 15-minute chart. You could do 5-minute high on this. 5-minute high day trade, not bad. CNC up alarm, but come back in. I'll reset the alarm. MOH alarm. UNH was sold a third already. Ring, I had an alarm go off, but that was a bad tick. So Ring, we entered yesterday, it's still fine. AVO exit plan. Is if the calls are liquid, Alex, of course you can make more money trying to leg out, but since I'm hedged, I got no problem just sending it as one order, which I'm gonna do right now. Didn't get filled at midpoint. So let me just increase it 2 pennies. All right, so I'm out. I guess I paid 2 cents more than a midpoint is on. Oh, Dell. I shoot. So the gap messed it up. This was a sell setup, bearish reversal, 3-bar turn. But the gap messed me up. That was on my list yesterday. Bearish end of day base. So that would have been an absolute no-brainer short had it opened flat or up a little bit. Look at CWD. Look at that. Look at that. What a friggin' idiot. I mean, well, I shouldn't say friggin' idiot. I should call him totally uneducated, buying something from $2 to 50. And I mean, the only reason you would buy it at 50 is because you think it's going to 60 or 100, right? But I would love to know the individual's reasoning for buying it at 50 and $55. Like, what? Tell me why. Tell me why. I really want to know. It's because I'm always interested in trader psychology stuff. All right, the RSK, now we can do it over 273.84. I love trader psychology. Hey, have you all ever read the book? I'm paraphrasing, but it's something like the Madness of the Crowds. It's longer than that. It's something, oh, Bubbles and Madness of the Crowd, something like that. But if you Google Madness of the Crowd stock market book, you'll find it. But it's a great trader psychology book. Oh, Campbell's soup alarm. Whoop. No, never mind. No, that was an early alarm. Early alarm. Yeah, Mindy, I saw this morning. I said it looked better. Now it's up 4 bars at resistance. And I checked put spread and there was nothing. XLF is getting a bid here today. Looks like it's going to bounce. SMH's 15-minute chart looks fine, but I don't like the daily. It's trading range. Cliff Cleveland, nothing. PFGZ, these haven't triggered. Microsoft, probably it's right at 50% retracement. So that, I don't know if it's the wisdom of market. Wisdom of markets. Okay, I forgot that part. I forgot that part. All right, D-Dog. Let's see what the premium has for us. D-Dog 132. 129 is 23 cents. That's nowhere near getting filled right now. Oh, our arrow gap down. Shoot. That was a bearish consolidation. I said it was on borrowed time. All right, Amazon, we did a half lot. You can add over yesterday's high, or actually I'll set an alarm at 237. We might be able to go in early. Yeah, I looked up and saw Amazon, I mean AMD 15-minute chart ripping. Yeah. Oh, AD. For me, it has to get over yesterday's high, but then it would be a continuation of a buy setup. Let's put E1H here. All right, we sold a third. 333.20. Groupon, Groupon. Oh shoot, that's a typo. It's a G Pro. Okay, on the spreadsheet I had Groupon, but it's a G Pro. 1, 2, 3. If it closes like this. Mo, we got a put spread. Let's see where we're at on that because it went against us. Coin up alarm. 113. Mo.